Okay, we will get started. If anyone logs in a bit later, all they'll miss is my introduction, which will not be the end of the world. So welcome to another in our series of enterprise webinars. And today we're looking at research and development and how the regime is changing. My name is Esther Carder. I'm a partner at Morkins & Smith, and I'm very pleased to be hosting this morning. Over the coming weeks, this year, you can look forward to lots more different topics. Obviously, invites will be sent out in due course. Details are available on our website. And obviously, if you have any suggestions for any topics that you'd like to be covered, please email those into us and we can look at covering those. And I'm sure most of you are quite familiar with who we are. There are lots of regular names on the delegate list, but for those of you who are slightly less familiar, Morkins & Smith is a top 15 UK audit, tax and advisory firm, and we work with lots of corporate and entrepreneurial businesses across lots of different sectors, as well as not-for-profit and private clients. And we're also part of More Global, which is an international network with presence in over 100 countries. So research and development. I mean, the government is changing the R&D tax regime and stating that the changes are intended to increase productivity and promote growth within the UK. And several reforms have already been announced, including bringing pure maths research within the scope of the release, including data and cloud computing as qualifying costs, restricting expenditure on some overseas R&D activities, and a whole package of measures to target abuse and to improve compliance. So today we're going to talk about what you can do to prepare for the changes that are coming in and how you might need to alter the way that you make claims, and also touch a little bit on the sorts of companies that might be eligible for claims as well. So on the panel today, I'm delighted to introduce Thomas Hayden, who is our Research and Development Director. He has a background in astrophysics, blimey, and he specialises in software companies and physics-based businesses. And we also have Michelle Denny-West and Nick Blundell, which are both tax partners within Morkins & Smith, and they have a wealth of experience of dealing with R&D claims from a range of companies across all different sectors. So I'm going to be asking the panelists a few questions today, but please do pitch in with questions of your own. It makes it much more interesting if we can make it a bit more interactive. Please do put your questions in the Q&A section because it's much easier to keep track of them there. And just to let you know that this webinar is being recorded, so please do feel free to share it with your peers or anyone else who would have liked to have attended today but was unable. So I think all the panelists, you're there, and just make sure your mute buttons are off. So I think question for you first, Tom. I mean, can you just tell us a little bit about the R&D tax scheme and what it is? And also perhaps some examples of claims that we've made for companies that might not typically consider themselves eligible for R&D claims, because looking at the people that are logged on to this webinar, there are some industries there that might not classically think that they're eligible.
Absolutely. I'm not on mute, so I've passed the first test already. Yeah, the R&D tax regime's been, it's been around for quite a while, 20 years or so, and it's really there to encourage general innovation within the UK. Most countries have an R&D tax regime of some sorts. The French has a particularly good one, Canada, the US, etc., and Germany's just brought one out. So to some extent, it makes us as a country competitive with other nations. I would say ours historically has been a particularly good scheme as well, making us very competitive, but we are here to find out some of the nastier changes that are being made to the scheme that may change that somewhat. But moving back to what R&D tax relief is, so essentially, if you were doing certain types of activities, so activities that meet this very specific guideline, it's called the Bayes guidelines, and I'll run through it in a second, then potentially you could make a claim and get either some money back in as cash or a reduction in your corporation tax bill in some way. So this set of guidelines, the Bayes guidelines, is what describes what makes something R&D for tax purposes. And I stress that word R&D for tax purposes because it's possibly different to what in general language you would consider R&D. But what it says is that a project that seeks to achieve an advance in a field of science or technology through the resolution of scientific or technological uncertainty is R&D, which obviously is a complete load of jargon made by committee somewhere in central government about 20 years ago, and has seldom been updated since then. So there are certainly some flaws in it, in that legislation, but it does apply very well to a very wide range of industries. So moving back to, I think, your original question there, Esther, but you asked, are there some areas that we've seen claims in that perhaps wouldn't necessarily expect to be able to make R&D claims, because we all know that biotech businesses are going to make R&D claims and researching cancer drugs, but what about marketing technology businesses? So we've seen quite a lot within marketing technology. We've seen projects to do things like image recognition within Instagram posts, for example, so that businesses can understand the impact of their marketing and their product placements when they're getting influencers to, sip a can of Coke on their in their video doing whatever. And it's all about the technology that underpins that. So if you've got something high tech that you're having to develop, you're having to take that step beyond the current state of the art with regard to technology in order to achieve that. And there is this element of scientific or technological uncertainty. So this element of a competent professional in the field going, I'm not sure how we could do this. There isn't information that's readily available to tell us how to do this. Then you've potentially got some R&D for tax purposes going on.
I'm going to wade in with a question, Tom. We've had a question come in, and I think this is the generality of this question in terms of using resources and expending costs overseas probably will apply to lots of people. So they've said, we're creating a custom cloud-based CRM system. However, we're using a developer based abroad in Australia. I guess the Australian bit is very slightly irrelevant. Would we still be able to claim for R&D tax relief? So I guess, costs aren't incurred in the UK. Can we still claim?
So I'm going to break down that question slightly. So there's two sides to a claim. There's whether or not your costs meet the allowable costs to claim, which is where the overseas part comes into it. But there's also the question of, does your activity meet the definition of R&D? So, for example, creating a custom CRM system. Just by looking at that on the surface, you wouldn't necessarily be able to tell whether or not it's going to qualify for R&D. You'd have to look one step below that and determine, okay, well, what technology is having to be brought beyond the current state of the art? So what's the baseline with regard to that technology? Are we stepping beyond that? And is there an element of technological uncertainty to it? So a custom CRM, I mean, CRMs have been around for a very, very long time. So the question really for that would be, well, are you stepping beyond the current state of the art, or are you just customizing an off-the-shelf package to work for your specific purposes? Because it's not enough for it to just be purely for the company, an advance. It's got to be an advance to the field of science or technology. So in that case, likely the field of software or the field of computer science. But that's that side, that part aside. So the idea of whether or not the activities qualify. On the other side, the overseas expenditure. I mean, that would be overseas expenditure. You are paying an overseas company to do it. However, it would depend when that expenditure was incurred, what financial period that fit into. So something we'll talk about a bit later, but it's for periods, financial periods that begin on or after the 1st of April 2023. So, for example, if you're planning to incur that expenditure and you're going to incur that expenditure in a period that started on the 1st of January 2023, ended, for example, on the 31st of December 2023, then that period doesn't start on or after the 1st of April 2023, so wouldn't come under those new rules, which is something for businesses to, I think, bear in mind. because you are able to change your year end. And I think that's something that perhaps some of my colleagues could shine some light on in this conversation as well.
I think the general point to the question was the fact that the expenditure was overseas. Generally speaking, for R&D, does that preclude you from including it in your R&D expense claims?
It will do, depending on when you incurred it.
Yeah, okay. And then just sort of continuing with the theme of the types of industries that might find themselves eligible. Somebody has asked, have you ever seen any R&D claims coming through the property development or management sector? Probably a slightly less popular one, I would have thought, but anyone seen any claims in those sectors?
I have, but they tend to be around software rather than around the actual property development itself. Occasionally you might get something around the property development, but it tends to be coming up with some sort of new software system that extends beyond the state of the art, that enables you to better manage the properties in some way. So, you know, the very fact of doing something bespoke isn't enough to make it R&D.
Yeah, okay. So before we get on to what the changes are, Michelle, maybe it's worth just taking us through how the current SME regime works.
Yes, of course. So for this, we've prepared a slide. We don't usually like to use slides for this.
No.
Quite a lot to get this through, but we thought this was better sort of illustrated by way of an example. Because the way tax relief works for small, medium-sized entities is actually quite complex when you actually compare it with a large company scheme. So if we take the current rules at the moment, there are two ways in which relief can be given. It's either by an additional corporation tax deduction, or if you're a loss-making entity, you can get a repayable tax credit. So we take a profit-making company in the first instance. So at the moment, for expenditure that's incurred up until the 31st of March 2023, for every £100 you spend on R&D qualifying expenditure, which again, going back to Tom's definition, you will get an additional tax deduction of 130%. So for £100 spent, you'll get an additional £130 tax deduction. At the current corporation tax rates of 19%, that gives you effectively a tax benefit of £24.70 in addition. So that's how the relief works there. From April 2023, we've all heard in the press that the rules are changing. Again, we'll cover that in a bit more detail later. But for small, medium-sized entities now, rather than getting that 130%, that is dropping to 86% from the 1st of April 2023. So depending on what rate organisations are paying their tax at, that relief will now drop to 16.34 or £21.50 in every pound. So again, it's quite a significant drop, but however, it would just depend on the tax rate. So for a company who is actually paying tax 19% now and paying 25% tax in the future, there is a drop, but it's not too significant because less than actually £5 in every £100 spent. But for loss-making entities, actually, what we are seeing is there's a lot more going on there, and this is probably the most crippling part, I think, for the industry, particularly for SMEs. So at the moment, if you're a loss-making entity, you get your tax-free via a repayable tax credit. So for every £100 of tax of eligible expenditure you make, you can have £230, which is your allowable loss, and you get a tax credit at the moment of 14.5% against that. But in money terms, that means you can effectively get just over £33 back for every £100 spent, which can be a very valuable source of income, you know, for R&D companies. But from the 1st of April 2023, that is dropping to 10%, which actually means that every £100 spent, those companies can only get £18.60 back, which is almost halving effectively what their support is. And so these changes are quite significant. But hopefully you can see for this, the SME scheme is actually quite complicated at the moment because it depends if you're profit making, loss making. Then there's also a raft of other things you do need to look at to see which is best for you. And actually for some small, medium-sized entities, it needs to be borne in mind that actually the SME, you actually cannot claim under the SME scheme. You have to use the larger RDEC scheme, which we'll talk about in a bit more detail later. But that's a sort of very brief overview of how it works.
I think it's a really interesting point as well that you bring up about it being quite complex, the SME scheme. Because one of the things that was mentioned in the recent budget narrative is a potential for in the future moving to a single scheme as opposed to two separate schemes. And you'll find out when I think Nick talks us through later the RDEC scheme, it's much more logical, it's much more straightforward. So there are some benefits, I think, to that, because, you know, as you can tell, this is a I would say, a legacy scheme where things continually got added to it to a point at which it became a little bit nonsensical in some ways.
And I think the fact as well, we feel like we need a slide to be able to explain it. I think it tells you what you need to know. It's not that straightforward to actually follow intuitively.
Absolutely.
Yeah.
So Tom, what are the proposed changes that are being put forward then?
Yeah, great question. So we've already talked about one of them, and I think that's potentially one of the largest, which is the loss of overseas expenditure for businesses. I know certainly for a lot of tech businesses, early stage tech businesses, they will use overseas developers, they will use overseas expertise for a couple of reasons. The ready availability of that expertise, particularly in certain locations in the world where they have fantastic tech hubs, but secondly, a cost-based reason. You know, getting some of that expertise in the UK can be extremely expensive, whereas you can get just as good developers, etc., from some of these tech hubs around the world for a much lower cost. So that's our first one, not being able to claim for overseas expenditure. The second one is the addition of cloud computing and the cost of data sets to our eligible cost categories. So this, I guess, some people would say is a positive one. So in the past, you weren't able to claim, so for example, for Amazon Web Services, that wasn't something that would be a qualifying cost, despite the fact that if you're, you know, a tech startup, you're probably spending quite a lot on this cloud compute capacity that is purely for R&D purposes. It's, you know, it's an expensive thing. The same goes with data sets. You know, we're at a point now where a lot of particularly biotech businesses and businesses in those sorts of areas, very high tech businesses, need to purchase data sets because they need to use them for their, you know, artificial intelligence, machine learning, etc., etc. And historically, again, they weren't costs that you could claim for. Now, what I would say, and I do want to caveat this slightly, because I can imagine there's a lot of people out there who are looking at their AWS bill of £1 million a year or whatnot and going, oh, fantastic, I'm going to be able to claim all my AWS costs. It is only your R&D related AWS costs or GCP costs or whatnot, your cloud computing costs that you're going to be able to claim. So you'll need to come up with a suitable apportionment between what is there for a commercial reason or you know, a production reason, and what is there for a development reason. So to some extent, one way of looking at that might be to consider you know, sandbox environments, that sort of thing, as you're doing your developments, how much are you paying for those sandbox environments? But it is not going to be everything you do if you are a commercial outfit, because you are definitely going to be using some of that for commercial reasons. So there's two sides to that. That's a positive thing, but it's not. It might not be as positive as it first sounds. So our next change that's worth discussing is some of our anti-avoidance measures. So I think a lot of people have been quite aware that there has been some less than scrupulous players in the R&D market. And I'm sure some of the people on this call have received you know, calls telling them that everything they do qualifies for R&D tax, and to go and make a claim through some you know, business that's above a garage somewhere in you know, Swindon or something like that. Now, the first of those is that you will now need to put in someone who is responsible for that claim. So you'll need to name a senior member of the team, perhaps a director, etc. I always find this quite an interesting one because, you know, it goes through the tax return. So someone signs off that tax return from the business anyway. But simultaneously to that, it is something that you now need to do. And I think it will help people in general. It will give companies more ownership over their claims, which I think is a really positive thing. The second of those anti-avoidance measures is the need to notify. If you haven't made a claim within the past 3 years, you'll need to notify HMRC within 6 months of the end of the financial period for which you hope to make a claim, that you intend on making a claim. Now, again, I think this is a bit of a strange one, because there will be a lot of businesses that might not necessarily realize that they can make a claim until they come around to doing their accounts. And why 6 months and not 9 months to fit in with accounting deadlines? So I think it's a bit of an odd one, but the advice there really is make sure that you are keeping up to date. You're talking to your accountant about these things, and you're trying to keep records as you go along, so that when it comes to the end of the year, you've got an easy way of identifying whether or not you do in fact have R&D there. On top of that, we've got the rate changes, which Michelle's already talked about one side, which is the decimation to some extent of a very, very valuable resource to a lot of businesses. But on the other side, we've got some more positive news. And I think I might pass across to Nick for this one, as this is for your larger businesses, but also for some of your SMEs that are receiving things like grant funding, etc., where they wouldn't have previously been able to claim for that expenditure under the SME scheme.
Yeah, so maybe now might be a good time for me to touch on the on the large company scheme, because as Tom and Michelle mentioned earlier, the two schemes are different, and whilst the SME scheme is becoming more restrictive in terms of its benefit, or less generous, the scheme for larger companies is becoming more generous. And just to sort of recap in terms of determining whether you are an SME or a large company, I mean, essentially it's based on the definition of SME, which it still has us bound within the European Union rules a couple of years on from Brexit, but it's still a European Union definition. So if you're an SME, the conditions are that you have under 500 employees in the business, and either your turnover is under 100 million euros, or your balance sheet assets are under 86 million euros. But essentially, the first thing you'd want to look at is whether you've got over 500 or under 500 employees. And the test of whether you're a large company is actually done in the negative. If you're not an SME, then you'll be a large company, and that's the scheme that you're in. So what Tom's just brought up there is the large company RDEC scheme, and hopefully, just by the fact that there's less numbers on there, as Michelle said, this is hopefully a simpler regime to understand, because it's basically the same whether you're loss making or whether you're profit making. The amount of cash you get is exactly the same. And although the large company scheme is something that's is in the tax code, it's a piece of tax legislation, if you like, it's not really a tax relief, it's more of a grant. And just to work through how it comes through and the benefit comes through, the current position, I'm just looking on the left hand side of that, if you spend £100 on R&D, at the moment you get a large company credit of 13%, which gets you to 13, but that is taxable, and so the current rate of tax at 19% gives you a net of 10.5. Now, the way that that's moving is that both the generosity of the large company scheme is increasing from 13 to 20. So you get an RDEC credit of 20% on that £100 of expenditure. But the tax rate, and most large companies will be subject to the higher tax rate going forward of 25%, that gets taxed, so you get a net benefit of 15. So that net position at the bottom moves you from 10.5 pence in the pound to 15 pence in the pound. So that's an increase of about 40% of benefit going forward for large companies that are subject to this to this scheme,
which I think is really it's really interesting in some ways as to why the government would make large company benefits so much more generous, but SMEs less generous. Normally, what we see is sort of the other way around. You know, large businesses will get a bit of a kicking, but the SMEs will get a lot of support. And I think we had some clues to this about a year ago when Rishi Sunak did his Mays lecture. And it was found through some statistics. Now, I don't want to comment on the importance or the factual correctness of these statistics, but it was shown that the SME scheme creates far less benefit for every pound that is spent on R&D than the large company scheme does. So there has been a real sort of swerve towards these large companies as a result. But secondly to that, I think it also links quite well with where I see R&D might be moving around grants, etc. So targeted R&D funding as opposed to general R&D funding, which the current scheme is. So this is a real benefit to those SMEs who have received grants. And if the government does increase the amount of grant expenditure, that particularly innovation grant expenditure, then it will benefit those companies far more than they would have got in the past. So I just thought it was interesting to add that in, but I'll pass back to Esther because I'm sure there's some more questions.
Yeah, there is. You mentioned, Tom, that overseas expenditure is now going to be excluded from claims, and somebody's asked, what about if you can prove that you could not get that work done in the UK? Does that make any difference to your ability to include it in your claim?
Yes, it does. However, it's going to be difficult to prove that. So the examples, for example, that have been used in the draft legislation are things like if you need to do volcano research, and obviously, as far as I'm aware, there's no volcanoes in the UK for you to go and do your research. But I would also say, you know, how many business? I certainly don't have any clients who do volcano research. I wish I did, but I'm not sure there's that many businesses in the UK that need a volcano to do their R&D. If the reason for you needing to use overseas or to spend money overseas is for a commercial purpose, that's not enough. It's got to be shown that it is something that is simply not available in the UK. You cannot do it in the UK. You know, so examples that I've heard used are the volcanoes, obviously, deep sea research. You obviously can't do that in the UK, or I guess perhaps you could if it was within UK waters in some way, but can't do that in the UK. And also the COVID vaccine trials that they did, where they needed to do some of those trials, I believe in Brazil, and you couldn't do them in the UK. So examples like that, but I think the way it's going to affect most people are going to be sort of saying is, well, I can't get hold of this expertise in the UK. It's not readily available to me, so I need to go abroad to get hold of that, particularly in industries like software. And that's not going to be enough to justify that expenditure.
Yeah, okay, that's useful, thank you. And somebody's asked about this 6-month rule that you mentioned. You know, it's annoying that it's not 9 months after the year end and it's 6 months. And somebody's asked, is that only effective from April 23, and is it still 24 months prior to that?
I believe it is only effective from April 23. But also, if you've made claims before, then you're exempt from doing that if you made claims in the past 3 financial periods. So it's really only going to affect, you know, new companies or companies that don't regularly do R&D.
Yeah.
So,
yeah.
Which I would say is fairly rare for a company to suddenly do some R&D and then not do any for 4 or 5 years and then do some more.
Yeah.
So,
And quite. Oh, go on.
No, Tom, I was just going to ask you to confirm in terms of the difference between that 6-month rule and the 24-month rule. The 6-month rule, am I right, is that to basically to notify essentially that you're going to make a claim, and then the 24-month rule is to actually make
it.
the detail of the claim.
So then another question, again, the same theme. I think the answer is no. So what if you've got a 100% owned foreign subsidiary doing R&D? Presumably if they're doing it overseas, the answer is no. But what about if the foreign subsidiary has a branch in the UK? So it's sort of the other way around. And is it about where the activity is happening, is it?
It's about where the activity is happening, but that's a really interesting point. And unfortunately not one I can answer off the top of my head.
Maybe that's going into the finer nuances that, yes, well, whoever that is, well, I know who it is because I can see, but I won't say. I would email Tom and have a chat about it.
Yeah, and I would also add to this that we've got, it's draft legislation, and I'm still desperately hoping that the government U-turns on this, because without being political at all, they have U-turned on other things, so hopefully they'll U-turn on this, because it's going to be damaging to businesses.
Why do you think the changes are being made? And someone's actually just asked, I think, just coming with the same sort of question, actually, why are they making these changes?
Yeah, great point. So the cost of the R&D scheme is reached, the best part of 8 billion a year. And at the last set of statistics that came out, there was quite a difference between what the ONS believes in the BERD survey of R&D, what they believe is going on within the private sector, and what the R&D scheme says is going on. Now, I would add that these statistics have recently been updated and changed, so the difference is not quite so vast. But when these changes were announced, there was quite a difference, and it was put down in large part to the fact that we are funding R&D expenditure overseas. Now, I can see from a policy perspective, from a UK PLC perspective, what do we want? We probably want to have these high-tech, high-knowledge jobs to be in the UK. Of course we want that. But it's not always possible to do that. And there's a reason why people use overseas people to do R&D. So I think that's the main reason. It's a costing thing. It's a large saving they can make. And over a number of years, we are talking about saving billions by doing this.
And I mean, how does this leave us in terms of competitiveness with the rest of the world for R&D claims? Is this likely to attract more businesses into the UK, or?
I think it's going to be terrible. I think it's going to do the opposite. I think it's a really short-sighted move. But then I would say that, I'm an advocate of UK R&D and the R&D scheme. But I know of businesses that I've had conversations with who are saying, do you know what? We don't need to be based in the UK. We could go to France. We could go to particularly pan-European businesses. And there are a large number of them, and France, for example, you can get a 30% credit on your R&D, which in the past was roughly equal to our 33% you got here, but now is nearly double.
Is now a good time to say something about the changing of year ends? I think it's come up a couple of times.
Yeah, because I think you had some more thoughts on that, didn't you, Michelle?
Yeah, no. So obviously we've talked a little bit about so the changes to do with the sort of cloud-based computing and overseas stuff comes in from the first accounting periods starting on or after the 1st of April 2023. The other changes we've talked about in terms of rates, etc., very specific to when the expenditure is incurred. So these comments are very much based on the sort of the new expenditure, I suppose, categories that are now coming in, or those have actually been removed. So if you've got an accounting period ending sort of 31st of March 2023, then at this point in time, you can claim for all your overseas R&D. So your accounting period starts before 1st of April 2023. But obviously, if you're in a situation where you've got a lot of cloud-based computing, then you may well be thinking, well, if you just delay your year end and extend by 1 month, if you're able to do so, your next accounting period doesn't begin, it then start on the 1st of April, so the 1st of May 2023. So by changing by that 1 month, you can bring potentially up to 11 months of cloud computing, you know, if you've got that additional, that expenditure that you have. On the flip side, if you have a lot of overseas expenditure, but the cloud computing side of things actually isn't something that you're going to benefit from, then you may well be looking to do the opposite in terms of, if you've got a 31st of March year end, appreciating there's lots of different year ends you can have. We take 31st of March for the sort of just purposes of simplicity. If you were to shorten by a month, so you stage you have 28th of February, your new accounting period would start on the 1st of March 2023. So actually not within the scope of these new rules for potentially another 11 months, which means that overseas expenditure you can benefit from for another 11 months. I know Tom alluded to that earlier, but I think it's just important to be sort of aware of that now and ahead of time. Obviously, for a lot of businesses, it's going to be about running the numbers and getting a high level idea. So again, talk to your accountant, talk to your advisor to see if it's even worth doing, because obviously a lot of businesses have their year ends for a reason, because it works for them commercially in terms of, you know, their workloads, it works for their staff members. And actually sometimes, you know, you might have bank covenants and things expecting accounts by a certain day or running up to certain periods. So again, it's more to look at than just what tax reliefs you can get. And it's also worthwhile sort of bearing in mind, if you do look to extend your accounting period, unless you've got very specific circumstances, you can only do that once every 5 years. So it's just, again, just making sure that if you've done that previously, it's probably going to be a no-go. And again, it's making sure you don't want to use this just to make a very small tax saving, when in fact it's not the best thing overall for your business. So I think the best thing I can say is just make sure you do talk to your advisor, talk to your accountant, and just make sure that you're doing it for the right reasons if you do decide to do it.
Thank you, Michelle. Nick, is there any other beneficial actions we can take now aside from thinking about changing our year ends?
Yeah, I mean, I guess that what I would say is the change of year end stuff that Michelle's talked about is in respect really of if you've got sort of overseas costs and those are coming to an end. With regards to the changes in the rates that are coming, the large company scheme becoming more generous, the SME scheme becoming less generous, that's not affected by the change in accounting periods. That is on a cut-off date of expenditure before the 1st of April and expenditure from the 1st of April. So what I would suggest is, if you're an SME, you might want to think about accelerating expenditure up to March to benefit from the better rate. Whereas on the other hand, if you're a large company, you might want to think about decelerating expenditure to benefit from the more generous rate after the 1st of April. So that's something you might want to think about if you've got the ability to do so. It's not very long until the 31st of March, but depending on whether you're an SME or a large scheme, you might want to accelerate or decelerate expenditure. The other thing that I would just say, what the government has said, is that they're looking to bring it all into one scheme, and it will probably ultimately, we are guessing, look more like the large company scheme than the SME scheme, on the basis that it's simpler, it's agnostic as to whether you're a loss maker or a profit maker, and it just feels like it's going that way. And one thing that I would just mention is that the large company scheme is EBITDA enhancing, so it does go through to your operating profit rather than through the tax line. So that's something also to be aware of, that the scheme going forward, the large company scheme, does go straight through to your sort of a top line, if you like, rather than below the line that might be important to know for some businesses.
Yeah. We've got a question come through about sort of HMRC opinion and opposition to claims. Somebody saying that they're getting a lot of opposition to claims on the basis of subcontracts, timing and subsidies. And do the panel have thoughts on HMRC opposition? And I was going to ask more generally, you know, if you are making a claim for the first time, given that there's been a lot of kind of hoo-ha about people abusing claims, are you more likely to get an inquiry if you're making a claim for the first time? And just sort of, I guess, the opinion on the appetite of HMRC to launch inquiries generally.
It's difficult to say really, as to whether you're more likely. I think the things that make you more likely are not necessarily you know, when you make a claim, that sort of thing. It's how well you substantiate that claim. what sort of there are certain things, and the question there raised one of those that are potential red flags or potential areas of controversy at the moment. Subcontractors, subsidized expenditure is one of those, and things like that might make it more likely that you get an inquiry. Also, there are some areas, there are some specific industries where it certainly seems like you're more likely to get an inquiry. Now, the difficulty is HMRC gives very scant data on inquiries. So, you know, it's not something that I can say, oh, you're 25% more likely. We're moving back to that subcontractor subsidized point. And this has been, for years, to be honest, a real area of difficulty. So the SME scheme itself doesn't allow expenditure that has either been subcontracted to the company or that is subsidized directly or indirectly by a third person. That means that if you're doing R&D and someone's paying you to do that R&D, then technically under the SME scheme, if you go by exactly what it says, which is what you should do, then that doesn't qualify. However, there is no such restriction under the large companies scheme. So we've had a few tribunals, etc., or we've had one specific tribunal that I think is very interesting recently. So that's Quinn London versus HMRC, where HMRC actually lost on this subsidization point. Now, it was interesting to hear HMRC talk about this about 3 months later, because HMRC had the chance to appeal it, and they have chosen not to appeal it. Even though they disagree with the results, which is quite clear to me that it's because they didn't want it to go to an upper tribunal where it would become precedent, legal precedent, rather than the first tier tribunal, which is what it was. It's a controversial area. It's probably an area that is most relevant to businesses within sectors like construction. And I think businesses should inspect their contractual agreements very hard before they submit any claim. I think it's something that needs to be a real consideration. I would also mention on that there is always the potential, if you submit an incorrect claim, for penalties. So you know, it's not just a case that HMRC, you know, give it a try and HMRC might kick it out. You know, there is a potential for penalties there.
Brilliant. Thank you, Tom. Well, I think we are 2 minutes over our allocated time, so apologies to everyone. I think some really interesting points made there, lots of changes, and it looks like, you know, sometimes it might be more beneficial to have your claim under the old regime. Sometimes it might be better to have it under the new regime. We've talked about changing year ends and consideration around that, and generally, obviously, the changes as to what sort of expenditure might be available. So obviously, if anyone you know, does have any further questions, there's some questions there that haven't been answered yet. We will take those offline and come back to you on those questions. But I think it's fair to say that every claim has to be considered on its own merit. So please, if you've got any potential claims that you want to chat through, the team are more than happy to have a no obligation chat through that to explore whether you're eligible for a claim and what you might want to do in preparation for the changes in the regime. So thank you very much for everyone attending. Please do fill in the feedback forms. They're super useful and super short as well, and you can do it really quickly, but super useful for helping us shape future webinars. And our next webinar is on rewards to retain and recruit employees, and that is on Wednesday, the 22nd of February. So hopefully we will see some of you at that as well. So thank you very much and enjoy the rest of your day. Thank you.